Okay. Like I said before, I am going to attempt to make this as painless as possible. For those of you who don't know, were anyone of you not in the last session? Not in the last session. Okay, good. I'm just going to do a really brief introduction. I've spent 35 years in association management. I've held almost every position you can hold with the California Peace Officers Association and then moving on. I was executive director for the Automotive Service Councils of California. We had 36 separate chapters in the state of California, some unincorporated, some incorporated, kind of a mess. Anywhere from 5 members to 250 to 500, just depending on where you were, Wairika or LA. I was also executive director for the California Association for the Education of Young Children. So I am not a finance accountant. We do have an accountant here. And she may be correcting me on a few things, and I'm totally okay with that. Because in the last session, we talk about our willingness to be wrong. But this is just hard-won experience that I'm sharing with you about finance in chapters and how it relates to the lead organization. Like we say, take what you can leave and leave the rest. Some of this may not apply directly to you. In that case, just meditate for a moment and then re-engage your attention when I do get you with something that you think you need to pay attention to, okay? All right, thank you. All right, so just to set the stage, we talked a bit about fiduciary duties in the last session we did on governance, but that was more from a board perspective and a chapter board perspective and general governance. This, I want to highlight what is specifically appropriate for those of you who are handling the money. So you still have fiduciary duties, but we're going to try and shift our board lens to really kind of a finance kind of lens at this point. So when you serve on the board of an association or the board of a chapter, you have fiduciary duties that you have delegated to you by the California Corporations Code and also federal guidelines for nonprofits and all of that good stuff. And the 3 main fiduciary duties you have, if you're dealing with finance in particular, you have the duty of care. When you volunteer for an organization, you do have some protections for yourself based on your being a volunteer. As long as you're acting in good faith, you're being reasonable in the decisions that you're making, and you're using good sorts of practices. So you do need to do your homework. It's not just a matter of picking up the checks from the last treasurer and trying to figure out where the signature card is and then realizing they don't use signature cards anymore and all that other good stuff. So do your homework. Pay attention to the responsibilities that you have, because you have a sacred responsibility. It's a sacred trust to hold the funds of your members. You know, you're stewards. This isn't an opportunity for you to say, I'm not going to let you spend that $10 on that board dinner, okay? This is the opportunity to be a good steward of your association's finances. Duty of inquiry impacts you personally, because most people, when they're making an inquiry, they're usually looking for answers about the balance sheet. So those of you who are having to answer those questions need to understand that members of your boards have a right to ask you those questions. In fact, they have a duty and a responsibility to ask you those questions. You can't be offended because someone's asking you, did you get receipts from that particular event? Okay? You may have made a mistake and not gotten them, in which case I recommend you all be reasonable people. Use your duty of care and try to institute procedures to not have that happen again. But you can't be offended when board members ask you about the balance sheet. Can you explain this? Can you explain that? They're also held to their duty of care and their duty of inquiry, which means they don't have a right to hound you forever because they didn't get the answer they wanted from you, okay? Provide the answer, be as forthright as you can be, and as forthcoming as you can be, and most everything can be settled. Some chapters, you guys are dealing with budgets of $500. Some chapters are dealing with multiple tens of thousands. I've seen chapters handling 6 figures. It just depends on the size of the association, where they are, and what their dues base looks like. So these sorts of ideas do apply to smaller ones and bigger ones, but like I said, your mileage may vary. Some of what I might say today might seem like overkill, but that's okay, because you may go on to volunteer for another organization and may use this later on in your life. You never know. Rely on expert professional advice. I absolutely strongly recommend that you develop a relationship with a bookkeeper and with an auditing firm. No matter how big your association is, you stay in close contact with CAMP, the large organization. Make sure you're in alignment and that you're following their policies and procedures as well. That you're not, just going off and doing your own thing, but that you're relying on expert professional advice, and that's particularly important for chapters. If your chapter has a $500 budget, please do not use your sister-in-law's husband or your brother to do the books. Okay? Don't use another volunteer who was an accountant in a prior life, okay? And assume that they can just do that for you. You have to be really careful with conflicts of interest. So independent third-party advice is really important. And qualified advice, depending on your budget that you have, okay? And you do have a duty of loyalty. You do have a duty of confidentiality. You're going to talk about things about finance that are going to need to stay confidential with an executive committee or your board or different things. However, you do need to also be transparent as well. You have to be able to walk that fine line between keeping confidentiality and being as transparent as you can possibly be. And the rest of this really doesn't necessarily involve finance in particular. So let's go through a little legalese. I'll try to make this painless. There's a little legalese that is particularly important for you all who handle finance to understand. This is important for boards in general, but in particular for finance. One is the applicability of corporate law. Associations aren't just someone's good idea, right? There's a body of law behind it. You're held to the California Corporation Standards. You're held to follow IRS exemption standards. You're held to all sorts of different governmental regulations. A lot of people look at their articles of incorporation or their bylaws and say, well, it says I can do it in the bylaws. It doesn't mean your bylaws are legal, everybody. Articles of incorporation and bylaws, if not reviewed by legal counsel when they're adopted, you send them to the state. The state just stamps that you have them. They don't certify that they're in compliance with the law. Okay, that's not what they do. People say, well, the Secretary of State approved our bylaws. No, they didn't approve them. They said they got them on this day and that you have them, but they didn't audit them for anything that might be legal. So don't always depend on your governing documents as the end-all be-all when it comes to financial issues. Make sure that you know what your bylaws say and make sure that you've double-checked it, okay? That's all I'm saying. Volunteer protections. As a volunteer of an organization, whether you have directors and officers insurance or not, and I highly suggest you get it, but if you don't, you do have some protections. And these are known as volunteer protections. That if you're abiding by your fiduciary duties and you're acting in good faith and you're being collaborative and you're making decisions like another reasonable person would take, you're generally shielded from private liability for your volunteer service. Now, that's not a 100%. And nothing, by the way, just because I was married to an association attorney for 10 years, nothing that I say should be considered legal advice. I am not an attorney. Don't take my word for it. Double check everything I say. But volunteer protections, sometimes those can be breached, though. Sometimes those can be breached. So if your chapter board decides to do something with the finance that's not okay, and you're the one executing the instrument, your personal assets could be put at risk because you could be named as an individual in a lawsuit. And if you don't have directors and officers insurance, that could affect you. It's rare. I'm not saying lawsuits are rare, because they're not, but it's rare that corporate veil is pierced, but it can be. So just be aware of that. Just know what the rules are, do your homework, find out that good stuff so that you can maintain sort of that volunteer protection sort of area for yourself, okay? There's something in the law called the rule of limited authority. And the rule of limited authority just means if there's no written delegation of authority, there is no authority. And the acting party may incur personal liability for it. This doesn't mean that you as chapter finance people can't sign checks, but you better look at your bylaws and you better look at financial policies that are put in place by your chapter boards that say you can, that's written down. A lot of people ignore that part because there's like, oh, I just got the books from Jeff. Yeah, go ahead and pay that $500 for that meeting. It's all good. If there's no written authority for it and something happens, you could be held personally liable for it, even if you have implicit authority. It's not explicit. Make sure it's explicit, okay? And that your boards have put those kinds of policies in place so that you know you can sign checks for how much, for who, when you need 2 signatures, okay? Just make sure that's written down. Ultra vires acts, this is a fun little Latin term. All it means is unauthorized actions. So if a board member or someone decides to take a financial decision upon themselves, they don't consult the board and they just go ahead and do it. That's an ultra vires act that took place outside of the policy arena, that took place outside the permission arena. You could get in trouble for that. So don't take any authority for yourself, even in an emergency. We're gonna lose our room block if we don't put that deposit down. Just write the check. No. Make sure that it's approved, that you get it approved, okay? Apparent authority. Apparent authority kicks in if you are the finance person in the chapter and you are doing the books or you're doing a contract, you're working on a contract and you don't have permission to work on the contract, you don't have delegated authority to negotiate contracts, and you sign a contract and something goes wrong and the association gets sued, you're not protected in that instance because that was apparent authority. It's one of the reasons why I tell associations not to give their logo business cards out to chapter boards. Because if someone hands out a business card and the other party has a reason to assume that you had the authority to do it, you'll be held to account for it because you had apparent authority. It's not on you, it's not on them to ask. They can just assume that. So be really careful. If you're using business cards and that sort of thing, make sure you have explicit authority, that's all I'm saying. Because apparent authority can and will come back to bite you. And association boards that get sued for that are held to account for the contract you signed, even if they didn't give you permission to sign it. And boy, that's an ugly board meeting when that fact comes out. Okay? They'll be held to account for your actions. So just respect them. Alter ego doctrine. This is kind of cute. It's my alter ego. Alter ego doctrine is just taking your hat on and off in different situations where you're appearing to act with apparent authority and it looks like you have that role. That's your alter ego. So it's just a little bit of a legal term, a little technicality. It's kind of tied up with ultra vires and apparent authority, but just so we can be really geeky about the legal language, we're going to say it. Powers of a director. You have powers, and your board of directors has powers. Your chapter board has powers. They have the powers to exercise their fiduciary duties. Like I said before, to ask you questions. Antitrust is a sticky area. I have seen Mark do 8 hours on antitrust and not been able to scratch the surface on it. You probably don't have as many antitrust issues as some trade organizations do. But any actions you take as a chapter board or as a finance person that cuts somebody out of any benefit that they're entitled to, or if you're acting to protect your association, you can get in trouble with antitrust. I'll give you an example. Antitrust actions are chapter board gets together and they decide that everybody's going to share their hourly rate with everybody else. And then everyone's going to agree to charge the same hourly rate, so that camped members have this nice hourly rate. And it's going to be higher than, or lower than your competitors. Okay, that's an antitrust problem. There was a little tiny, tiny association of piano teachers in New York. They had like 50, just a little tiny, tiny association. They all got together and they decided that they would charge the same rate for piano lessons. And they thought they were doing a nice thing because they thought that they were helping, sort of underprivileged kids and that sort of thing. We're just going to agree not to charge really high rates so we can make sure we get as many little students as we can. IRS came in and fined them, I'm going to say $30,000 for that action. A little association of 50 little piano teachers in New York. They didn't have $30,000. I mean, my goodness. So just take antitrust seriously. Don't talk about your fees. Don't talk about prices. Don't talk about billing. Don't talk about insurance billings, other than just general terms. General terms, very general terms. If you're collecting information on your members and you're collecting information and you're sort of getting what type of clients they serve and that sort of thing, don't ever report that out with identifiable information. If you're doing surveys, make sure that it's anonymous and that you're reporting past data from at least a quarter ago, if you're doing any type of salary surveys or any type of surveys like that, okay? That'll keep you out of trouble. Private annulment. Private annulment kicks in when your association has money and they decide to give it to their board members or their members to benefit them directly for service. So, the IRS says you cannot use members' money to inure benefits to boards of directors, leaders, or members. So let me give you an example. An association had a subsidiary with an insurance company. They were doing workers' comp. They owned an insurance brokerage. And they got a windfall after a particular legislative thing. And they brought so much money into the organization that they were like, you know what we can do with all this money, because we don't need all this money? We're gonna rebate our members. We're gonna push that money back out into the membership. And the IRS had a cow because they took direct profits and direct revenues in and then directed them privately inured, financially benefited their own members. Now, how could they have gotten away with that or done something similar? They could have kept the revenue and they could have lowered their dues for next year. Same effect, same benefit, delivered in a different way that wasn't cutting a check to a member. Now, you're gonna have boards that have stipends. Stipends are fine, right? Up to a certain level that's reasonable. Remember, we're using duty of inquiry, duty of care. If it's a reasonable decision and your board members, you decide to give them $500 a year or $1,000 a year or something for their service, that's fine. Just don't give them $50,000 a year or $100,000 a year for their service and get in trouble, okay? Everything is relative. Expense reimbursements are fine. Expense reimbursements are fine as long as you have expense reimbursement policy and you collect the receipts. Okay? Yes?
2 questions. Where will these handouts be?
You know what? I did turn the handouts in, and maybe they're on the app that you have. But if you give me your business card afterwards, I will send you. I gave the abridged version for the handout. I have an unabridged version of all of this. So just give me your card afterwards, and I'll email you the unabridged version.
Is there a time during the talk to ask questions?
Yeah, sure. Why not? Let's do it. Got a question? Sure.
So what if a board decides that they want to donate to a worthy cause?
That's fine. She asked a good question. What if a board wants to donate to a worthy cause? That's fine if it's a 501c3. So your board is deciding to donate to the foundation, perhaps, or maybe there's another organization they want to donate to. That's totally fine. That's not an inurement to an individual, unless it's the Association of Shelley Alcorn, you know. so yeah, yes.
What about offering scholarships to members to attend like the camp annual conference, or to help them, like pre-licensed folks with their membership dues?
Good question. Scholarships, completely fine, as long as you have a scholarships policy that's written out, and that the amounts that you're giving for scholarships are not over and above the cost of the conference. So, and I know that sounds funny, right? It's like over and above the cost of the conference. It's like people go, well, you know, you'll get this, and, you know, maybe you even want to do reimbursement of expenses. You might be able to push that, check with your tax advisor. But if you push it any farther than that, you're going to run into trouble. So scholarships are fine. Scholarships are fine. Because that's considered sort of a furtherment of the mission and the vision of the organization. So it's not necessarily considered an inurement. What an inurement is just a cash bonus, kind of. Okay?
So
Yes.
If we get a stipend, then that needs to be in our bylaws what the stipulations are.
Doesn't need to be in your bylaws. It does need to be in policy. Yeah, you need to have a policy about stipend, who gets it, when, how much, and make sure that that's written down before you issue it. And make sure that it's reasonable and that it's not a lot. Okay? Yes. Another question? Who is writing those policies? Good question. So, if you're a chapter, start at the lead organization, your main organization. See what their policies are that they have. Check your affiliate agreement if you have one. If your chapters have affiliate agreements with camp, check those for any regulations. And then if they don't, then you'll want to craft something at the chapter level and go ahead and do that. And I would bring it to the finance people. Talk to your finance person on staff. It's probably a really good resource. If you've got a good CFO at camp, talk to the CFO and make sure that those things are clarified. Okay? Yes?
You can also go on the chapter leadership email thing and ask other chapters if they already have one that you can use as a model. Yeah.
Excellent. She mentioned you can go on the chapter leadership portion of the website and ask other chapter, the listserv that you have, ask other chapters. Okay, excellent suggestion. Yes?
So we have a scholarship policy for like our events, but what if we wanted to do something like that wasn't about our organization, but like associates and students and maybe funds for to buy books or for partial tuition?
That would be fine. Are you guys 501c3s or 501c6s? You're 6s? Some are 3 and some are... It's easier for a 3 to do that because 501c3s are really for educational and scientific purposes. 501c6 status is generally for furtherance of the profession. I still think it's doable, but I'd want you to check on that. Be careful with it. Yeah, be careful with it. But yeah, 501c3s, that's really common. The C3s have all sorts of leeway in their bylaws and in their articles to sort of issue scholarships to whoever for whatever reason. And, you know, maybe they have, whether it's for the profession or not, you know, they just want to support education or something like that. C3s have a lot more leeway than C6 on that, but double check that. Okay, cool. Hey, we're doing all right. Good. No, thank you. Thank you for the good questions. I had answers. If I don't have an answer, that's why I'll tell you, call someone else. So, ethics. Oh, no, the ethics piece. Okay, we'll try to make this painless. Ethics. Please be as transparent as you can possibly be. Okay? Just do it. I have no idea why we fight and fight and fight and fight about who can see the financial statements. Did that member send a registered letter and did we get it 5 days in advance? And are we going to put it on a CD and give it to them? I mean, guys, comport yourself in a way where you shouldn't be scared about sharing your finances. I mean, it's a reasonable thing. If you're scared about your financial statement, I think you probably need to look at some of the things you've been doing. because you should feel confident enough to be able to share those things. If someone is being really militant, you cannot see our books. Okay, you don't want to let them see the books, for God's sake, but give them the financial statement. Let them chew on that. And if they have questions, ask, answer. Okay, try to be as transparent as you can. Now, sometimes you can't, right? Sometimes there are confidential things that happen. Sometimes there are things that happen for other reasons that you can't share. It is perfectly fine to say, I can't give you an explanation for that, but da-da-da-da-da. Okay, be as transparent as you can. And if you have to have something that's confidential, just check it out. Check it out before you just refuse to answer the question. Financial dealings. You guys are stewards of association finances. You're not owners. You're stewards. So you have to consider the mission of the organization first. You have to consider the organization first. And all of your decisions, from top to bottom, whether they're big or whether they're little, need to be made with that lens. It's not your money. I can't tell you how many associations I've gone into and I've worked with chapter treasurers or chapter boards, and they're like, it's our money. We're going to decide what we do with our money. And I'm like, well, actually, it's not your money. It's your members' money. Don't forget that. You're stewards. A lot of people get, man, you give them a bank account with 6 figures, they get real possessive real quick. So I'm just saying, just remember you're stewards. You guys aren't going to have issues like that. Well, I've seen with other people. You guys are good. Conflict of interest. Please make sure that all of your actions are free of even the appearance of a conflict of interest. If you have a personal stake in the financial decision that's being made, you have a duty to disclose the personal stake that you have, and then the board around you can make the decision as to whether you can participate, you need to recuse yourself, or you need to leave the room during the discussion. Okay? And even the appearance of conflict of interest is deadly. If you think self-dealing accusations are deadly, deal with dealing for someone else. Okay? Please don't hire your friend to be your bookkeeper. Okay? Don't make those decisions. Conflict of interest isn't an automatic recusal. It's not an automatic leave. It is an automatic declare. I have a stake in this. Okay? If you have a personal stake in it, declare it. Membership. Ooh. Lots of boards get into trouble when it comes to removal of members. There's almost always a clause in there somewhere that has to do with removal of members. It impacts finance because of dues and those sorts of things. Just be really, really careful with those, that your policies on admission, sanction, and termination of membership are very, very clear and very, very explicit. Because if you terminate a member, don't give me your dues check, you're no longer a member, and you don't have any type of policy to back you up, any type of reason, any type of appeals process, et cetera, that gets really ugly, because then members can say, oh, it's antitrust, you're trying to prevent me from being a member, or, ooh, you're acting in bad faith. And lots of lawsuits result from members who are angry because they've been dismissed from the membership. And sometimes they've been dismissed for really good reasons. Assaults, all sorts of things, okay? But you have to make sure that you have admission, who can join and how they can join, how they're sanctioned for behavior that's not in accordance with the ethics of the organization, and then whether or not they can continue to be a member. Make sure you have an appeals process and a judgment process that's independent and fair before you take that on. I've seen too many board chairs go, I just don't like you. You can't be a member of my chapter anymore. That's awful. What's worse is they decide, I'm not going to get rid of them. I'm just going to hound them and ostracize them and make their life a living hell until they leave. Also bad. Don't do that. Okay. Communications. It is really tempting to spend communications when things go wrong, especially in finance. We made a mistake. How are we going to spin this? How are we going to tell the story so we don't look so bad? Don't spin things. One of the nicest gifts I got when I became an executive director is I had a fellow exec who had mentored me, gave me a plaque to put on my wall, and it was, don't tell them what they want to hear, tell them what they need to hear. And I took that to heart, and I have had to say, oh, we got a problem on more than one occasion. Confront it head on and explain it clearly in a non-emotional way, and take responsibility and accountability for it. Don't try to spin it or hide it or make it seem like it's not as bad as it is. 9 times out of 10, you're freaking out about something that other people are like, oh, really? Sometimes it's not as big a deal as you think it is until you make it a big deal for yourself. So, there we go. Okay, The Politics of Finance. This is one of my favorite cartoons of all time. Bucky the cat. Seriously, Robert, you have to do something about Satchel. He's been very rude today and nasty. So, Bucky, for Halloween, would you like to be a pot or a kettle? I shall be pot. Finance causes more arguments in associations than just about anything else, except for the napkin colors at the annual banquet. Okay? It's a little joke, a little humor, but it's true. Finance gets very political. And it comes down to when you forget that you're stewards and you think you're the one in control. And all of a sudden, conflict starts to happen because there's this sense that you're taking too much control and it's the members' money and the members want to know. Don't let that start. Usually it's a combination crime of a pot and a kettle going at each other. So beware of those political battles that ensue. I've also seen chapter board members decide that they don't like the finance person, and they go hunting for mistakes. Oh, that's fun. Checking every receipt. I want to see the accounts payables list. I want to see the bank reconciliation. No. Now we're out of the realm of transparency and good faith, and we're into you're going after an individual because you don't like them and you're trying to attack the finances because that is considered one of the most important functions, the most delicate function. So board politics can really go after the finance people. Not saying you should be worried about that. I'm just saying be aware of it. And if you see it starting in other chapters, go to the core, the root of the conflict. It might not have anything to do with finance. It may have everything to do with a person's personality and the fact they're not communicating well. Financial accountability phases. So you're the brand new treasurer, you're the brand new CFO, you're the brand new finance person in your chapter, and you're going to go through these 5 stages. First is enthusiasm. Second is disillusion. Third is panic. Fourth is search for the guilty. Punishment of the innocent, and praise for the non-participants. You can't win. You can't win. Just admit it. Just accept the responsibility anyway and do it. Someone's going to hand you a box at some point. It's the box. It's the famous box. You're the one taking over the finance. Here's the box. Checks, old receipts, files that are out of date, all kept in contact until like 2013, 2014, and then 2015's gone. You got to reconstruct that. You got someone who didn't like to use QuickBooks, so they kept everything on 3x5 cards and a Rolodex thing. You're trying to track expenses from the conference 3 years ago with a 3x5 card. Oh, God. Okay. Financial accountability phases. Get your box, be happy you have the box, and then get smart about the finances so that you never pass a box to someone else. Get it digital, use software, do your thing. You should not have to transfer the famous box, okay? And if you have a good documents, records, and retention policy, you shouldn't be passing along 3 boxes that have information from 1974 that no one needs anymore. You only need 7 years, people. You only need 7 years. Let it go, okay? So, there you go. Financial accountability basics. Congratulations for being stand-up members and accepting that responsibility. I'm proud of you. Okay, finance basics. Oh, let me go look at my timer. Let me see where I am. I always overtalk. Oh, good, I'm about to let you guys free pretty soon. Okay, here are some basics. Fiscal responsibility. Implement and follow recommended policies and procedures. You can find policies and procedures everywhere. I'm sure CAMP has some. I'm sure your neighboring chapters have some. I'm sure you have some. You can Google them, and you can have 150 sources from Board Source and ASAE, and God only knows. Lots of Googling you can do, okay? Look for policies and procedures, implement them, and follow them. Follow them. Draft policies that have exceptions. Think about the exceptions before they happen. Otherwise, you're going to find yourself tied up in policy for the rest of your life. Have some contingency plans built in there. Budget appropriately. I'm going to talk about that in a minute. Produce accurate and readable financial statements. We'll talk more about that. Monitor and manage your financial performance. And then personnel or volunteer considerations. If you're small and you're all volunteer, that's going to be a different relationship than if you have staff and your chapter hires staff or the association hires staff on your behalf. So there's just going to be differences, and we'll talk a little bit about that. General features. All basics, all stuff you already know. Just reminding everyone, your fiscal year hopefully is the same fiscal year as CAMP itself. All chapters should have the same fiscal year. It means your fiscal year starts January 1st and ends December 31st, or it starts July 1 and ends June 30th. Those are the two big fiscal year categories. I don't care what you use. You could use April to March. It doesn't matter. Just make sure that you're on the same fiscal year cycle as your association. It just makes your accountants' lives easier, your tax reporting easier, your lives easier. Just check your fiscal year, make sure it's the same fiscal year as your association. Cash versus accrual methods. So there are two different main accounting streams. There's a cash-based accounting, which is we count the checks when they come in and we record the expenses when they go out. This is what you do in your household, right? Cash-based accounting is all we do. Paycheck comes in, we pay the bills, we kite a check or two, and we wait for the next paycheck. Or maybe some of you are more responsible than me, I hope so. Accrual methods are different. Accrual methods are more sophisticated. A lot of associations use them. And what that is revenues are recognized when they're incurred, and expenses are recognized as they're supposed to happen. It has no relationship to the actual date of the check coming in or the date of the check going out. This isn't an accounting class, so I'm not going to go any deeper than that. But what I'm saying is most associations use an ugly, awful Frankenstein blend of the two. Most associations use accrual for dues, meaning they just send a dues billing out periodically and they throw that revenue number that they expected to get from those invoices in February, and the bank statement never shows that much revenue coming in from dues. And then members get upset and they go, but you're supposed to have 20,000 in dues in February. And you're like, no, that's just when we recognized it, not when we expected to get it. Who understands that? Nobody. And you know why they don't understand it? Because most of you are using cash-based for expense. So they look at the expense and they go, well, you paid the security bill in February. And you're like, well, that's when the security bill was due. We paid it in February. And they say, well, then why doesn't the bank balance equal the revenue balance? And then you have the whole conversation again, okay? Just be aware. If you're using accrual, try to use accrual for both, or try to use cash for both. Or if you have this Frankenstein accrual for dues and cash for everything else, that you at least are sophisticated enough to try to explain it to members better than I just explained it to you. And check with your own association, because that may be where a lot of the confusion comes in. A lot of chapters get shot at, a lot of board members get shot at because of the accrual versus cash. Nobody's stealing the money, no one's overestimating the money. 20,000 in February, we only got 10 in, but then we got 30 the next month, and people are like, why did you have 30? You were supposed to have 10. Oh my God. Because we accrued for our dues and nothing else, and that's why you're confused. So, just remember that. Software, oh please, integrate with your association. If you're a chapter and you are working with CAMP and you guys are trying to sync up any type of I don't know if they give you software to use. I have no idea what your situation is, but I can tell you that you need to try and be as integrated with the lead organization as you can possibly be, because it just makes it easier, okay? Especially if suddenly your chapter folds. Catastrophe can happen sometimes. Sometimes politics and things go haywire and a chapter absolutely folds and no one knows who has the box. Okay? That's a problem. It has happened. I wish I was kidding. Use common off-the-shelf software like QuickBooks. Please don't let your son, or daughter design a financial accounting system in Access that you can use. Don't do that. Use QuickBooks. Just use something standard so that when you hand the box to someone, they go, oh, QuickBooks, yeah, I recognize that. I know how to use that. Try to use off-the-shelf software as much as you can and try to coordinate with fellow chapters so you all figure out what software you're using, okay? You need a chart of accounts. I can't tell you how basic this is, but how many people don't do this. You need to have line items and a chart of accounts so you can properly sort the types of expenses that you have. A chart of accounts is going to have an account number on it for this type of expense, and you're going to log it with that. The paper envelope with receipts from the conference, not helpful. So get a good chart of accounts. And in the handouts that were here and the ones that I can email you with the unabridged version, this is based on a full chapter that we wrote for the ASAE's component relations book for finance. I can just send you the chapter if you want to give me your card afterwards. We have sample charts of accounts for you. But if you don't have a specific account number when you're logging expenses that's tracked on a single account number, your balance sheet will never, ever, 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 ever make sense. It will be a nightmare. Bank accounts. If you have a bank account, please balance it monthly. That's important. A lot of small chapters don't. Like, it's the same 1,000 that's been in there all month. It ain't gonna be different. Balance it anyway. Get caught up, because anything can happen to you at any moment. You may win the lottery and you may take off and build your dream home in Hawaii. I've been told I shouldn't say be hit by a bus anymore. That's insensitive, so I'm not saying that. Ha ha ha. But anything can happen. Please balance your records so that you're up to date, so someone can come in behind you immediately and not have to sort through a lot of stuff. Just think of it as a kindness you can do for someone. Multiple signatories and check signing authority. Don't ever let your chapter finance person be the only person on your chapter account. Ever. You always have to have more than one person. And a nice policy that says 1 signature for up to a certain amount and 2 for over, whatever that means for you. Some associations have single signers up to $5,000 or $10,000, and then double signers for over $10,000. You may want to have, $100 and then double signers for $250. It's proportional to your budget and what you have. But having 2 signatories seems like a problem, but it's really not. It's really protection for both of you because you're volunteers, right? And so you want to use that reasonable standard that we talked about and that volunteer protection so that you're protected. Yeah, you had your hand up.
And I would advise you not to have an outside person out of your group be a signature.
Oh, what a great point.
What happened to our chapter? They had the chapter administrator, a signer on their account.
Yep, that she brings up a great point. Not outside, just not an outside person, just a random person, someone who's friends with, or someone who's an admin or something like that. Have another chapter leader. That's a really good point. Thank you for bringing that up. Do you do your own dues billings, or does camp do the dues billings and then just remit money to you?
Actually, we're all independently, we're loosely connected to camp. We have to follow a lot of their rules, and we can't be in conflict with their bylaws, but we're all independently.
So you're all separately incorporated then. You all have your own incorporation status. Okay, perfect. If you're doing your dues billings, do you have a non-deductibility statement on your dues billings? Okay, you need to get one. And there's a sample in the handout that I'm going to send you. Dues are sometimes deductible as ordinary business expenses, but the proportion of your dues that you spend on any political activity or any lobbying efforts or anything like that are not deductible. And if you do not put that in your dues billing invoice and in your newsletter every month on the front page if you need to, the IRS can come in and fine you for that. Because what your members should be doing is only deducting that portion of dues that is not spent on political activity. So if you look at your dues base and you go, I have 1,000 members and they pay me $100. So what is that? Somebody quick, I'm not a math person. Okay, 10,000. And you spend $3,000 on going to the Legislative Advocacy Day. You have to tell everyone, if you're deducting your dues, you can only deduct a certain percentage that isn't related to that political expense. Yes, ma'am?
What if your organization never gives to political organizations?
Double check it anyway with your tax advisors, because I don't know if that particular law has changed and if anything else is included in that non-deductibility statement. Talk to your bookkeeper, maybe call the CFO at CAMPT and see if there's updated language on that. And I'll tell you, I was working for an association that got fined by the IRS. We got fined $12,000 because we had never told our members to only be able to allow 80% of their dues to be deducted. They were just deducting their whole dues payment as an ordinary business expense, and we had a lobbyist and a PAC. And they didn't care that we didn't know that that was a thing. Yes, ma'am?
Camp at the state camp, they do say that.
Good. State Camp has that statement?
Here that, yeah,
Because
you
they have
contribute to a PAC, which is politically related,
Right.
versus just our membership. They delineate all of that.
Good.
But as chapters, I'm not aware that we do that.
Okay.
at all. But then again, we're not using anything for political purposes.
And that's great, and that's really great. Just make sure that you keep that in the back of your mind in case you do start. And watch out for your legislative day expenses, because that could be considered lobbying, even though it's not a lobbyist. But you're going to the legislative day, and if you sponsor or expense reimburse any chapter members for going to legislative day, you need to take that off so they don't deduct that amount on proportion of their dues. Okay? Okay. It'll just save ya. Okay, really quickly, let's talk about a couple of key things. You guys are doing balance sheets? Okay. Balance sheets are just your complete financial position. It's a snapshot in time. It's accurate one day and inaccurate the next. Members should know that. And you can use it to compare your financial position from prior. Statement of activities. This used to be called income and expense. It's now referred to as statement of activities. This is just activity for a certain amount of time. Money coming in and money going out. Compare it to the budget to monitor your performance. And then statement of cash flows. Are you guys doing statement of cash flows? Your accountant can help with that. It's not as hard as it seems. What you're doing is you're just calculating the use and flow of the cash that you get and when you get it, and how much cash you have on hand and how long you can go. Okay, that's statement of cash flows. When does the cash come in? When does it go out? There's a couple of key ratios that you might want to start watching if you're a bigger chapter in particular. One is your liquidity ratio. This is all your liquid assets. This is all the cash you have on hand, not investments. It's cash you have. If you can cash in a stock, that's great, but it's not liquid until you get the cash, okay? Until you get the actual money, divided by your current liabilities. And this answers the question, can you still pay your bills and for how long? So you want to see, are you liquid or not? You want to make sure you have enough liquidity so that you can maintain operations, especially if there's some catastrophe and dues drop suddenly. You want to have enough in reserve so you can keep moving forward. You have a profitability ratio. Just because we're nonprofits doesn't mean we have to spend every dime we get. That's not to say we shouldn't be stewards of our members and making sure we're spending as much as we need to make their lives better, but it also doesn't mean that you are constantly scrambling for funds. Okay? It's not good governance to constantly scramble for funds. You can divide your net revenue by different amounts and show you how you're performing overall. Are you profitable or are you not? It's not enough to have a conference budget that has income from last year and expenses from last year, and that's it. You need to break those down. Expenses for what? For travel, for teachers, for faculty, for this, for food and beverage, et cetera, et cetera. Make sure you're budgeting for those things so you can see how you're performing overall. Last but not least, your activity ratio, your debt as a percentage of the total capital you have. This just shows you how fast you convert your assets into cash if you have investments. So if a catastrophe happens, you can get your hands on it. Okay, internal controls. Internal controls are extremely important, and they're very, very hard for associations because there's normally only one or two people who are doing this. You still have to make sure that more than one person is handling your finances. Okay? You always have to have 2 sets of eyes, 3 sets of eyes, 4 sets of eyes on how you're taking the money in and how you're dispersing it. It's for your protection, not so someone else can get in your business. This is for your protection. Ask an independent auditor to consult with you. Ask your fellow chapters. Use your chapter listserv that you have. Ask CAMFT. But look at internal controls. Internal controls are all about clear direction on how the finances are handled and how the day-to-day operations happen. Financial controls are all about who's controlling the money. Good internal controls help prevent fraud, misuse of funds, or accusations of financial impropriety. Even the accusation can damage your chapter, sometimes beyond repair. So make sure that you have more than one person doing these things. No one person should be in control of all aspects of your finances. No one. So, division of duties. You need to divide these duties up. You can do it with 2 people, as long as you divide the process up. You need to have one person who initiates the check request. That comes from a person. Someone initiates a check request. Could be someone from the board, could be the board chair, could be whoever, whatever your decision-making policies say. You have one person who makes the check request, and then you have another person who gives approval to pay. Okay? Someone needs to ask for the money, someone needs to approve the money. That can't be the same person. I'm gonna ask myself for $100 and I'm gonna approve it. Doesn't work. Yes, ma'am.
About like the initiation, like a vendor?
Anyone. Yeah, anyone. Anyone. Who makes the check request? If it's a vendor, then it's an invoice that comes in, it's expected, you know it's coming in, you have an invoice for backup, okay? That's fine. Or it could be someone else in leadership or whatever. Authorization. Custody. Who keeps the checkbook? Who keeps the digital access to the bank account? Should be more than one person anyway, but that shouldn't be the same person who's making the decision to disperse the funds, because that's just too easy. And then recording. Who enters the expense into the accounting software? So you can have an initiator and custody, someone who makes the check request and someone who keeps the checkbook, and you can have someone who gives approval to pay and someone who enters the expense. You at least have 2 people dividing those 4 duties up if you don't have enough chapter staff to have one person doing each of those tasks. Yes, ma'am.
Very simple example from this weekend. For example, Laura paid for one of the extra hotel rooms. She gave me her receipt. We have like a little paper we fill out that says this is what it was for and everything. No one like initials it or signs it that they approve it, but like I'm the president, so I sign the check and give it to her, but I'm gonna get reimbursed too.
Mm-hmm.
I can't sign a check to me, right? That would look bad.
That would look bad.
We don't have a treasurer yet, so we got problems.
Gotta get a treasurer. Yeah, gotta get a treasurer. And I know it sounds simple, right? Like, who's gonna accuse these nice people here of like not being able to write a check for themselves for an expense reimbursement, right? It doesn't matter.
Do you recommend someone initial that little invoice?
Yes.
Okay, so
Yes.
that's the authorization step.
Yes.
And any board member, or we just have a designated person?
Usually you have a designated person, but any other board member who's not you would be fine, okay? As long as it's somebody else, okay?
Can you repeat just that question?
Yeah. Actually, I'm gonna have you repeat the question.
Okay, into the mic.
I'm providing a simple example from this weekend. So, well,
I paid for stuff with my own credit card, and I need to be reimbursed. And we have a little reimbursement sheet that you fill out what was it for and what was the amount, and then we write a check and give it to the person. And you said, have a second person initial or sign this reimbursement sheet, and then like I can't write a check to myself. So I'll be on the lookout for a signer.
Have a signer on the account. Yes. Yes, yes, yes. It's just, and I know it sounds so ridiculous. It's like, because it's such a small example, but you see how that can get really out of control, though? Really quickly? Yes, ma'am.
Well, I know recently, I'm the treasurer, but I know recently I didn't like the bank, and I'm the new treasurer, right, for this fiscal year. I switched the bank accounts. And so, but the bank that I moved the money into, they required either the president or the secretary of our board, our chapter board, to come and sign off on everything, and then I'm a signer as well.
Yes.
So there are, I mean, you have to have all those steps.
Exactly. And I might not have done the switch without written authorization from the board first. So just to cover yourself.
The president was aware.
Yeah, as long, and you got an email trail, and that's fine, but that's usually something that you would want a board approval for, just so there's a paper trail. But it's fine, and you're right, banks are usually good. They usually don't just let people just open up bank accounts without second signers. Yes?
I would also recommend that whether your treasurer is using QuickBooks or you're hiring an outside bookkeeper, that they monthly send you a backup of the entire thing.
Yes.
Because sometimes we had in another organization, not a camp chapter, the treasurer walked away with everything, all the records, all the books, all of QuickBooks, and they had no copies. So
Yes.
it's really good to have all of your QuickBooks files saved to a disk so that that doesn't happen.
She brought up a great point. You should always have an independent third party have a backup of your QuickBooks and of your financial information on a monthly basis. So there's a hard copy somewhere else. So if your treasurer decides to walk away with the QuickBooks and the account, which has happened before, you have something to back it up with. You have something to kickstart with. So yes, absolutely. Yes?
Does the same thing apply for electronic checks? For example, I made the payment for our renewal for QuickBooks, and I sent the receipt and everything to our president and past president, got approval for reimbursement. Now, I normally, as the CFO, am the one who sends the checks out to pay our various expenses. So now I need to be reimbursed for this expense. And it's usually done electronically, so do you think in this case it would be a better idea to actually get one of our paper checks and take it to the president and have her write it out and sign it?
I don't know that you have to go that far, as long as you've got that paper trail. She's asking about digital transactions, and she's had an expense that she's done. She's turned in the receipt. She's gotten the approval from the president, who's approved her to do that, and she's going to make a digital transfer back to herself. I think you're still fine because you've had two people at least look at it. And sometimes, let's use some logic. Sometimes that's fine. Just make sure you've got the receipt and everything and the expense report and all that good stuff. I love the expense reports that come in without receipts. Those are so fun. It's like, oh, really? Really? You're doing good. You're doing good. It's okay. Okay, now, division, let's see, where are we at? Woo, we got 10 minutes, okay. We got the good stuff. Key fiscal policies. Here's some fiscal policies that you should put in place. A reserve policy. You should probably have an idea of how much money you want to keep in reserve. A typical association or a typical association chapter, if they're big enough and if they have the funds, they usually try to keep 6 months of operating expenses in reserve. It is okay to have a reserve policy. You just need to have a policy, okay? And there's lots of samples out there for it. Investment policies. Your chapter might be too small, but your chapter might be big enough to pursue investments. So you need to have policy that stipulates what brokerage firm you use, how much you're allowed to invest as a chapter board, whether you're going to use high risk, medium risk, low risk, bonds, CDs, have that all stipulated before you start handing money over to the insurance broker. Yes, investment broker.
Do an investment policy, you actually can specify in there things you don't want to invest in, like cigarette companies.
Yes.
Or you can actually specify that in your investment.
Yeah, that's a great point. In your investment policy, you can specify that you will not invest in fossil fuels or cigarette companies or things that are not healthy, so that your chapter knows, hey, that return rate looks really good on that company, but that company's a world eater. Maybe we shouldn't do that. Okay, that's an excellent point. Expense reimbursement policy, we've talked a lot about that. Make sure you have a policy for what. A lot of associations don't reimburse for alcohol. Some associations do. That's the biggest trip up, I think, in expense reimbursement forms, is not specifying what you will and will not pay for. So when you get that bill for the open bar that the president had, oh my God. Okay, so that one in particular, because that one can get real fun. They decide to have a hospitality suite in the president's suite, and we're gonna expense it all. Oh Lord, okay. Conflict of interest, we talked about that. Political contributions, you should have a policy about political contributions, whether you do make them or whether you don't make them. And for what and for where and all that other good stuff. Whistleblower policies. Whistleblowers need to be protected. If someone in good faith has reason to believe that something in the financial world has been improper, you should not retaliate or punish them for coming forward and telling you in good faith. That is just bottom line, and required by the IRS, by the way. So it's an important thing to have. You need to have a whistleblower policy, and you need to treat whistleblowers with respect. I'm not talking about the ones that are just trying to take you out for political reasons and be in pots and kettles, okay? I am talking about good faith whistleblower. Yes?
I just keep thinking about these are very important positions, so I thank everybody for being here, but something that just keeps resonating with me is, as a person coming into these positions, it's important to keep up your professional liability.
Yes.
But what are some other things that you think would help sort of put in some protective measures for us besides our, individual?
Number one, directors and officers insurance. She's asking, are there additional protections for volunteers beyond just sort of the general volunteer rules of the road, which can and can be pierced and all that other good stuff? If you can afford it, you absolutely should have a directors and officers insurance policy. Because if the board gets sued, the insurance company foots the bill, not the individual board members. So directors and officers insurance is sometimes harder to get for smaller chapters, but it's not impossible. It's also possible that CAMP may have directors and officers insurance, and they can put riders on for each chapter. I used to do that. My ASCCA had their directors and officers, and we put a rider in for all of our chapters so that they would be covered by our policy. So double check on that. Yes, ma'am.
It's actually quite the opposite. They're requiring that we put them on our D&O insurance.
Oh, they're requiring you to put them on. Okay.
And they will give you a stipend back. They will pay you a refund. CAMP will, if you prove that you've gotten a D&O insurance that also insures them.
Okay, why not? Well, let's cross-insure. Can't hurt. But that is an interesting one. But that's awesome. That's fine. That's fine. I'm glad they're paying attention to it, to be honest. That's fantastic. Okay, last but not least, member access to financial reports. We did talk about that. So, last but not least, and then I will send you along your way. It's really important to have audits done of your financial books. And a lot of chapters don't do this because they don't think they can afford it. It doesn't have to be that expensive if you have the right auditing firm, but you absolutely should have an auditor come in and audit your books. You don't need a full accountant's audit every year. There are other options. There's a full audit, which is an in-depth review, and the auditors go in and they make their recommendations. They look at your books, they certify, this is what we found. And then they make recommendations. That's a full audit. If you can't afford a full audit every year, you can do a full audit every other year or every 3 years. And in the meantime, you can have an auditing review. It's still an annual thing. It's a lot less expensive. It's not certified by the accountant, but it is approved by the accountant and developed by the accountant. But you have a review that's limited in scope and meant to uncover any material misstatements. So don't think I can't afford that expensive audit every year, so we're not going to do it at all. There are different levels. You can also do a compilation that is just a compilation report. You also want to switch up your auditing firm every 5 years, right? Because what if your auditor develops a really cozy relationship with the treasurer who just conveniently keeps skipping the term limit and stays on? Your auditor can sometimes not be that great. Sometimes you need to audit the auditor. So every 5 years, I would switch firms and have another auditing firm come in. Because if you have an auditor who's in collusion with someone and they're auditing, you're getting beautiful audits. Oh my goodness, they're perfect. Every year, we are doing so well. Decade later, you might be surprised that your auditor wasn't actually doing what they were supposed to be doing. So, okay, guys. Look, I didn't mean to scare you, and I certainly didn't mean to bore you, and I know we went down like a lot of like rabbit trails, et cetera, et cetera. Yes?
Are you wrapping up?
Yep, I'm starting to wrap up, but go ahead.
Last thing is, do any of your chapters offer like an honorary membership or a life membership that's free or something and it's a different price? Anybody do that?
She's asking a question about whether you offer free or honorary memberships.
Yeah, because our chapter did that in the past, gave a person an honorary member. We recently found out that's against the law, that you can't, in a membership organization, you can't have a membership category that costs less than everybody else and they get the same benefits. So I just heard about that, so I didn't know if anybody else had that. Don't do it if you're...
Yeah, watch out for the free and honorary members. Make sure they're not getting all the benefits of membership, that it's just very limited.
Susan, put that on the chapter leadership thing, because somebody's going to have the bright idea to do that.
Yep, okay, I got 3 questions. I'm going to go here, here, and then here.
Okay, so we don't have a free honorary membership, but we do a lifetime membership, which is a certain amount of money, which is going to be a lot less than if you pay every year, but the benefits are the same. Does that fall into the same category?
You would have to find out.
You need to find out.
Because what I heard was you have to pay the proportion of benefits you get. It has to be commensurate with that, but I don't know. I just heard about this, so, and I'm not sure. I don't know where we put the laws. I haven't read it or anything.
Yeah, and this is brand new for me, so get advice on that. I imagine it's commensurate and proportional. Typically, lifetime members, they kind of retire and they're not really as involved in it, sort of an honorary thing. So there's that, but just double check with your accountants.
Because we have members who are active currently who continue to participate every year who do a lifetime membership for
You might want to get it checked out.
And then they don't ever have to pay a membership due again.
Was actually
Yeah, as long as it's proportional.
It was actually Nabil that told me about this because we didn't have a lifetime membership category in our bylaws, so we eliminated it and we told her she was no longer an honorary member. And then she was very upset because she was like given a plaque at a meeting and like, now what do we do? So then when we went to Nabil and said, what do we do? He goes, oh, you can't even do that. I mean, like, he knew more about it, but I don't know all the details. So maybe we'll have him.
Yeah, you should clarify that and share that information with each other, because that's news to me, but I'm not surprised. It doesn't surprise me that that's new. Okay, so just beware of that. And it kind of goes back to that sort of unfair advantage sort of theory, sort of theme in antitrust and that sort of thing, that someone else is getting more benefit for less than you're charging other people. If it's not tied to a specific like income category or something where you can have a categorization, that can look like an unfair advantage for certain members over others. But this is all new to me, so get advice on that one. I can see where the theory is coming from, but I don't know the actual ins and outs on that.
If every member has the opportunity to do the lifetime membership, then it wouldn't really be unfair because everybody can do it.
That may be true, but you'll have to check that out, because this is all new to me. Okay, yes.
One last question. So in our chapter, we do, if you become part of the board, part of our board, part of the board, then they get their membership fees.
So can I read you this thing?
Covered, they get a free membership.
I think that's fine. You could consider that a stipend, right? It's a stipend, it's a small reimbursement. They're serving on the board, there's a reason for it. I think that's fine. I would say that's justifiable. Yeah, whoops, hold on. She was mentioning the question about board members getting free dues in return for service, and I'm going to say that probably falls into the stipend sort of category where they're getting a little bit of a benefit for serving on the board, and I think that's fine because that's commensurate to the service that they're giving. So I think that's fine. Yeah, go ahead.
So this actually was from when I was in the bylaws change meeting, because it says here, Amendment 2 is, there are currently 730 camp emeritus members who do not pay dues and yet receive member benefits. The IRS does not allow such nonprofit organizations, including 501c6 organizations, to charge no dues or even minimum dues to some members who receive the same rights and benefits as other members within the organization. The IRS views doing so as a breach of the prohibition on private inurement, which you just talked about, and as a result, our current emeritus membership category needs to change. So how that extrapolates into other membership categories that might get the same sort of thing, they just are worried because they only have this one that is against the law now, but there are other things that probably fall into that.
Yeah, so I'm not going to be able to repeat everything she said, but there's bylaws changes and there's things going on and discussions being had over this. This sounds like a new regulation that's come out. So you're just going to need to pay attention to that. If you're giving way discounted dues or free dues to people, you got to be able to justify why you're doing it. Apparently the IRS has said that. I'm going to go with what the IRS says. Ah. Okay, we had another couple questions over here. Was your question answered as part of the discussion? Okay. We're at time. Just please do your best. You're going to be fine. Get that D&O insurance and do good things. Do good things for the world. Thank you very much for being here. Enjoy the rest of your afternoon.